for our April update here, the median price was down a little bit. I mean, I know there's a lot of factors, but down from the month before to about 525,000. But that's still up 22% over last year's median. So still a huge increase in 1 year. Our active listings do continue to drop, and it was down 15% over last April. So
Oh,
we
wow.
are going down in the amount of listings, even though it seems like we've had more, it seems, I guess, compared to January and February's inventory. But if we look at it compared to last year, it is actually still down 15%. So still very low inventory in our area. Homes across Canada in April were down 27% in sales. So definitely that interest rate is scaring off some buyers compared to April 2021. But the average price of homes in Canada was up 7.4%. So we are seeing, still looking at that massive 22% over last year in Sarnia. Sarnia's values are going up quicker, year over year versus all of Canada.
Hello, YouTube. This is Andrew. Welcome to the Real Estate Channel. This is Sarah Arseneault, our expert in-house today in the Sarnia market. And I gotta love your Instagram handle. Just throw it out there for us quickly.
So my Instagram handle is She Will Sell It. It's also Facebook, LinkedIn, everything. I was recently hacked on Instagram, so ignore the amount of followers, starting from scratch, but got my at least handle back, so that's good.
Yeah, and I just wanted to highlight that right off the bat because I thought that was, I mean, it's simple and to the point, and there's no denying what you do, right? Speaking of which, you'll notice that Sarah is in her car right now, which is fantastic. She's out hustling for her clients, even at this very moment, and she spared some time for us. So with no further ado, I guess we do have a presentation queued up, do we?
Yes, we do.
Let's get into her.
Perfect. So as Andrew mentioned, I do the Sarnia and Lambton region, but in terms of investors, I mostly focus in Sarnia as this is our biggest kind of city center. So for our April update here, the median price was down a little bit. I mean, I know there's a lot of factors, but down from the month before to about 525,000. But that's still up 22% over last year's median. So still a huge increase in 1 year. And we've seen that for basically all of 2020 so far. So it's still going steady. The homes are selling for on average of 114% of their asking price. So things are cooling down a little bit and things are getting priced, where they need to be. But our active listings do continue to drop, and it was down 15% over last April. So we are going down in the amount of listings, even though it seems like we've had more, it seems, I guess, compared to January and February's inventory. But if we look at it compared to last year, it is actually still down 15%. So still very low inventory in our area.
So even though we're seeing this with interest rates doing the things they're doing, people are scared off a little bit. But in Sarnia, we're seeing the low inventory, which is then keeping the prices up because the demand is kind of overlying factor, right?
Correct. Yeah. I mean, there are still buyers. I think it's in the next few slides, but we'll look at the months of inventory, and I think it's all pretty much in line with what is happening in Ontario. It's often joked that whatever's happening in Toronto and London hits Sarnia a month later, which is sometimes true and probably also a factor because our prices are lower, right? There's not many cities, even at this time, where the median price is 525,000, right? Like that's pretty low still for Ontario. I mean, I'm sure you've heard it a lot from other investor focused realtors as well, but like 8 homes across Canada in April were down 27% in sales. So definitely that interest rate is scaring off some buyers compared to April 2021. But the average price of homes in Canada was up 7.4%. So we are seeing, still looking at that massive 22% over last year in Sarnia. Sarnia's values are going up quicker, year over year versus all of Canada at this point anyways.
And Sarnia is kind of enjoying this appreciation now, like, in the sense that, like, historically it hasn't been like a high appreciation market. Am I correct in that?
For sure, yeah, and I've mentioned this in other months, but yeah, like I remember my father even saying like he's held at duplexes and things in the past, and he, the 80s, 90s, early 2000s, and Sarnia was kind of like not even going up, 5% or less even a year, they was pretty stagnant. So since I would say about 2018, but especially 2020, 2019, those COVID times, Sarnia has seen massive appreciation, which is great for investors or people trying to get out of the market. But obviously, it still hurts the locals and, the young people as well that are looking to stay in their community while, people from out of town are like, I'll live anywhere if it's this cheap, So it definitely does hurt some people, but overall, I do think it's just getting to where the balance of the majority of the province already was.
So I've often joked to people that there's two markets within Sarnia, and Sarnia tends to be, from what I've experienced, is a bit of a bubble market. It's sort of outside of the normal purview of the overall Ontario market. It seems to self-isolate somehow, but within it you've got the local market, and then, like, call it the Toronto effect. And if you ask, like, what's a house worth, you can get two different prices. Somebody who's lived here their whole life is going to say, well, that house is only worth $350, but somebody from coming out of the market or Toronto, they're going to be like, oh, 500 is fine,
Yeah, and you're so bang on. Like, there's this one area or a few areas, like you get your Cardiffs and your Sherwoods, where there's a lot of townhouses. And last year we were listing a home, and we put it up for, I believe he wanted 210, but the value was like 190 at the time, right? So 190, and locals would be like, it's not even worth 190, like, no. And it sold for 260, which at that time was like, and it was from someone out of town, was like crazy. And they thought nothing of it, right? Like 260, you'd be like, sweet, a townhouse, like, awesome. No condo fees, like freehold, great.
Unbelievable.
Yeah, and now they're up even higher. So, that same, the Sarnia, would be like, that's still not worth 200, and now they're selling for 350, for the same thing, or 300. But these are like older, rundown, for the most part, townhouses. So I definitely agree with you. There's definitely my local clients and that are buying for themselves and investments are definitely different than the out-of-town investors. But neither are wrong, because they're still getting the rent values that support, what they're buying.
Yeah, exactly. I'll let you continue. I'll stop interjecting.
Oh, that's fine. Oh, all good. But I really just wanted to look at, and I know a lot of investors like to see this as well, but looking if you can see that just like at the residential market activity. So I know we talked about things, going down 15% in terms of listings over last year. So the new listings in April only in our local areas on the left. So in 2021, we had 222 listings in the area. And then this year we had about 192. So what we're seeing here, and I've watched a few other ones from this month as well on the channel, and I think we're all seeing similar things, whereas on the right, the months of inventory, in 2021, we only had 0.6 months of inventory, which is really low. Whereas in 22, even though we're down, that 15% of listings, we actually have 0.9 months of inventory. So even though we're down listings, we're actually up in months of inventory. So I think this, is a testament to how the market has been cooling, even locally here in Sarnia.
Yeah, for sure. Things are opening up a bit. People are relaxing.
Yeah, I mean, I think it's kind of like, these gas prices. Yeah, it's definitely hindered some people, but a lot of people are still booking and trying to make it work because they want to get out of here, like they want to travel, they want to do normal things
Yeah.
that they did prior. So I think that definitely accounts. I mean, I had buyers the other week that are like, yeah, or even sellers, we're ready to list, but we're going on a road trip across Canada, or we're doing this first, which I said, great, let's talk when you get back, can't ruin your vacation. But these are the things I'm seeing, or buyers going to Panama or things like that, where it's like, oh, I'm not ready just yet because now that I can do everything, I'm going to do it.
That would be interesting to see what happens mid to late September then.
Yeah,
If
honestly,
everything just hits the market all at once.
yeah, year over year, honestly, every year, they say, spring market, but my fall market has been by far the busiest out of ever. And it's people are getting back and just trying to finally get in and say, I want to be in somewhere by Christmas. So I better put the pedal to the metal now because, it's the end of August, beginning of September. So I don't know. I think you might be right. There might, even with interest rates, be another strong push later this year, which might mean, for depending what investors are looking at, it might be a good time to buy right at this point because as the competition cools, it's always a better time than when competition is high, right?
Absolutely.
So yeah, it's definitely a quieter time, but there are still lots selling and over asking. So it's just a shift. I like to break. I know you know Sarnia a little bit, but I do like to break it down for investors that aren't aware of the area.
Yeah,
Um,
she did a screenshot this.
yeah, so I mean, I could break it down way more, but for the sake of our presentation, this is where I kind of like to leave it. So North End is, your nice areas to live, more residential, less kind of rentals just based on price point. Especially now, you see that the North End, I forgot to put the percentages in this month, my bad. But it's went from 550 last year median price point to 625 this year. So still a huge jump, which we are used to seeing. I have been finding month over month, though, the North End seems to have the lowest price jump, just because the North End has always, in my opinion, been a sought after community, to live in for schools, for life, right? So
Mhm.
that has seen a slower increase, especially as investors aren't, flocking there because of the prices. Central Sarnia, obviously, that includes most of the downtown core, that central area, and down to newer subdivisions. There are definitely investment opportunities here, but it isn't an area still that's completely sought after by my investors anyways, just again because of price point. But it ranges. Last year the median was around 320 and this year 392 for April. So still a jump. We still saw steady increases in this area. But this is the area too I'm seeing right now anyways, where you can find a lot of conditional sales, or that's what, things going past that offer date, and where you might be able to find something that you can get a conditionally sold on or for a better price point at this time. Sherwood, Cardiff area. So this is where we were talking, those townhouses that have went crazy. There's lots of townhouses in this area, even though it's a south end, which, if you talk to a local, a south end is the lower end of town. All this end of town is very different. Sherwood has always been considered a nice area to live. It's really close to Lambton College, which is a main college, so people like to live there. Great student rental area. It has seen, from last year of 317 to this year 531. So this
Wow.
area has seen a massive increase. Yeah, so massive increase. I think last month it was a little bit more tame. But I would agree that right now the median price in Sherwood is probably around that 531 stage, especially for detached homes. And where I think this huge bump of Sherwood is for that price point to this year is because the townhouses are going for so much more than they did last year. So people
Right.
can't afford to live in there because they can't buy, a detached home. They're now buying a semi, or they're buying an investment condo, and that's what they're renting out, because the price point of these rentals, like, you can still get 1,800 to 2,000 a month for plus utilities for a townhouse. So people are buying them because they don't care about the condo fee. If they pay, they're still getting more value than buying that detached home, right? So
Absolutely.
it's pretty.
It's interesting too how you see, like, in Toronto, you saw that there was a mass exodus from the city, and so then therefore the condo prices went way down because they were the first to be exited. And then when prices start to go back up, and then people come back, and you see the condos go back up again. And in Sarnia, you have the same effect with, like, North End's really expensive. Where's the next nicest neighborhood? Okay, Sherwood townhouse is cheaper, and so then they go up, and eventually something else will happen, and people will switch around to the South End probably or something like that.
Yeah, and the South End, forever was, you could buy even probably 2 years ago, 3 years ago for 150, detached home, because this was the area that was kind of run down, slower, closer to the industry, just not where someone wanted to live. Whereas now it's turning into, especially for locals, like the only place they can afford is a starter home. They're like, well, if rent prices are $2,000 a month, I'd rather live there and buy something for, $360 and start, like, and pay
Yeah.
the same and own something. I also find, like, for investors, this is the area where there's a lot of those R2 and R3 zonings, these older parts of the city. So if you can find something there with that right zoning, and it's already run down, there is opportunity there to make it into, if there's the accesses and egresses, to make it into that R2 or R3 home, to make your numbers make sense, right? So a lot of this is in that South End, which you can even see, like, it's went from around 232 last year to 376 this year. So the increases in this area are pretty huge. And I do think it's fueled by, like we said, out of town investors, but also because people do need a place to live locally. So if they can't afford Central Sarnia anymore, they're going to the South End, right? Where the communities, and that's where appreciation is helping, is that you're getting these communities that have been run down and they're turning into something better, right?
Right.
So they have to now live in the South End. So you have young families that are, revitalizing their property, are promoting, better businesses in that area. So it is something that is changing. Um, and that is nice to see. So that is one thing that is nice about this market for the locals, is that the communities are changing and shifting.
Yeah, and you can certainly see that if you drive around the South End, that you'll go turn onto a street that you might first assume isn't, oh, this isn't the greatest street, and then sprinkled throughout that street, you'll see a house that's just been brand new siding put on, new roof, new deck, and then, like, another rundown house next to it. And so you sort of see the pride of ownership injecting itself throughout sort of the less nice neighborhoods there, right?
For sure. And I knew people years ago that, even just, like, because the homes are older, the taxes are cheaper as well. So you see people that are older too, that might want to travel more, are moving to these areas, flipping the house, leaving their higher taxes and just getting into that neighborhood as well. Because I
Mm-hmm.
always joked, I lived in Toronto too for work prior to moving back to kind of my hometown area. And I said, we joke that the South End is bad, but it's nothing compared to a good area in Toronto.
Yeah.
Like we joke it's bad, but it's really not. Like,
I funny. I'm from Toronto. Recently moved to Sarnia, and that was actually one of my factors. Is that the worst part of Sarnia is still comparable to, like, the average to nice spot of a. Everybody has gardens. Everybody, everybody. It's like, it's uncanny. I love it.
yeah, yeah. The biggest thing, like, oh, well, you can't be in that neighborhood because you're going to get your porch, your patio stuff stolen. I'm like, you would in Toronto too, like,
Yeah.
so yeah, so it is different. So it's different conversations to have with those investors. And, really, I still like people to visit here if you've never been here before, because you need to know, like, I have investors call me up that are like, oh, it's 3 hours, I've never been there. I'm like, well, you still need to come sometimes, if you own something, like, you still need to know what you own.
Yeah. I've been investing in Windsor for most of my career, and that's even further. So
Yeah,
what's the
yeah,
excuse? Get out there, people.
exactly. Get out there. But,
Yeah.
property management, all that still exists. That's cool. But you still need to kind of know what you own, right?
I love this. I think that from my experience, this is very accurate, and kind of covers all the bases. I guess the one thing that I would maybe ask is, you could probably pretty safely group Point Edward into the North End. I notice you don't technically have it overlapping.
Yeah, I'd say you could. It is still, I would still put it on a market on its own. It is
reacts differently?
Yeah, it does. The price points isn't at, like, it can be higher than some of the north end, but then it's not as high as Lakeshore, right? Like, I feel like for the investor perspective, I just kind of leave it out just because, again, the
You're
price
not
point
going there.
it's not quite
Yeah.
there, and there's not really duplexes. There's not many R2s or R3s. Like, besides, like, for those that rent in that area, it's, the sandy lanes, the massive apartment buildings. It kind of has its own market. I joke that it's kind of like an island, like, I think they have their own t-shirts and stuff. Like, if you're from Point Edward, it's like its own community. It's not Sarnia.
I've just speaking in generalities. I mentioned earlier how I've come to realize, or my take on it. I travel all over southwestern Ontario, up and down the 401, been to all these little tiny communities and stuff, and I really found that Sarnia is this weird bubble. The way that it reacts to things, the market's slightly behind, and the people are very super nice, but also like, this is Sarnia, this is our place. It's an hour down the 402, and people sort of drive by it without realizing it's there. But then within Sarnia, you also then have Point Edward, which is then even more isolated, and I think, if I'm not mistaken, have their own council and
Yes,
governance
they
and
well,
stuff.
they get a lot of money from the casino, they have their own
Yeah,
stuff, right? So, from the investor's point of view, I usually just leave it out. Like, if you want to invest, like, yes, it's 5 minutes down the road. There's beautiful beaches. There's lots of stuff there as well.
maybe an
Just the price.
Airbnb play or something like that. But
Yeah, maybe. But I think it still falls under Sarnia for that kind of thing, which they don't like Airbnbs, as you know. So
that's right.
there's pros and cons. So for my mass investors, I kind of just leave that out. But if anyone ever wants to talk about it, I'm definitely here and open to it. It's just, yeah, I would group it into with the north end in terms of pricing for the most part. But it still is a different market, and the people that want to live specifically there.
Gotcha. Yeah.
It's different.
Well, I think that we've covered it. I mean, Central and certainly South End is where the investors want to be, and that's kind of all there is to it, right?
Yeah, for sure. And I wanted to bring you, as we were saying, I was saying off camera that we're seeing more and more duplexes and triplexes come up. So I was going to just kind of compare a deal that happened a few months ago, and kind of look at where the market has been and is, and what's kind of selling in terms of this.
Right on.
So multifamilies, this was two that were for sale, obviously just stock images, but there was two that was for sale. Property one gave you vacant possession. It was cosmetically updated. It was still like an 1890s home though, so we're talking old home, but cosmetic updates. There was very little yard, and it was busy rodent area in the downtown kind of core. Number two, it was fully tenanted at this time. It needed some updates, so we're talking like all new windows and doors, but the inside was, cosmetically updated for the most part. It also had a little yard, and it was in a more residential neighborhood, but only about 5 minutes from the first one. So in most cases, they were kind of had the same zoning. The biggest difference was that number one that was vacant was missing a parking spot, so it only had two. And number two had a detached garage, but they were listed for the same price point. So how did the market react to these two, just to kind of show investors what's happening and what people are looking for? So number one had a 2-bedroom unit, a 1-bedroom unit, and a 3-bedroom unit, whereas number two had 3 2-bedroom units. In my eyes, I would always like 2 bedrooms or more just for the rental. But in this case, I mean, number one only had a small basement unit. Parking wise, number two had way more, and the rents totaled about $3,400 for the second one, and about $4,100 for the first one would be the market rent. Expenses were about $1,000 a month for each, and your night incomes for the vacant one was about $37,200 and $28,800 for the second. So the first one sold in multiple offers, actually, on offer date for $580,000 for this R3 triplex, whereas the second one actually sat on the market and did not sell. Where it was listed at $499, and we were able to negotiate down to $475. So for two that, I mean, essentially are in the same area, we could get the same market rent eventually. They were decent tenants in number two, so it wasn't going to be vacant, but it did have AC, whereas the first one did not, and it did have enough parking and was in a more residential neighborhood. The structure of the building, I would say, would probably be better as well in terms of they're both older homes, but the structure was better cared for number two. So if we looked at this, like the investors all flocked to that first one, the cap rate was about 6.4 as is because it was vacant. So to get that market rent. But with that 6.4, there was really no room for improvement down the road for refinancing or for moving on from that. So the cap rate would continue to be that 6.4 at the current market rent. Now for the second one though, the cap rate was 6% at the 475, so they were able to enter it at the 6% cap rate. But if the rents were to be improved, it would increase it to about 7.8% just at the cap rates alone. If they were able to get kind of a shorter term rental in the basement with all of the plants and the things going on, like a furnished rental, that would have potential for even higher on like a 6-month contract or something a bit less than the yearly contract furnish. There would probably be even more potential there. So I just wanted to show this. I hope everyone can follow along, but really looking like, I know a lot of the investors want something that's kind of turnkey and really ready. But a lot of people are looking for that exact same thing, which is resulting, if we break down the numbers on these multis, you're actually, leaving money on the table for yourself in the long run.
That's really funny because I guess it depends on what part of the market that you're exposed to. And I was talking to somebody just recently about, turnkey or not turnkey. And I come from an environment where why would I ever buy turnkey?
Yeah.
And it sort of dawned on me that there's, because that's my mentality, I've got these blinders on that says, I want property number two. I want the beat up piece of shit that has terrible tenants because I can see the potential value.
Yeah.
But a lot of people, I think that once you get into a different category where you're actually just trying to protect money, right? Yeah. If you were to put $580,000 in the stock market and watch it grow, I mean, it would be the same difference as putting $580,000 in a building that you don't have to touch, worry about, think about. It's all brand new and somebody's managing it for you. It's the same sort of mentality, right? Whereas a lot of us investors are, I guess what I would call in the growth stage, which means that we're clawing at everything to build our empire still, type of thing.
For sure. And you're right. It depends where you're at in your cycle as well. I'd say too, like, besides the windows and doors, it was pretty clean. The tenants weren't terrible. So it was probably, I'd say I could add a third one if I found one. But it was probably more of a moderate stage where you don't need to be there, chipping out basements, things like that. Most was done.
Even better.
But yeah, it really depends. You're right. But I am finding too, investors are still coming wanting this perfect place, but with all the upside. I think it comes down to are you an investor or not at the same time, right? Like you mentioned, the stock market is no different. If you can't handle, it might go down or that low, or you might get a bad tenant, or you might run into something behind the walls, like. It's not for the faint of heart, as I'm sure you're aware yourself.
I still ask myself when I walk into most of the properties that I buy, is what did I just do?
Yeah,
what I got myself into here, right?
Yeah, exactly.
But you're right. It's not for the faint of heart at all.
Yeah. And that's, it was really just to show people that there are opportunities here. They do exist, but you sometimes do have to, work with a realtor you trust, work with someone you trust, and really know the local market, especially now. I have investors reaching out saying, I bought this wholesale privately. However, I was going to sell with you and flip it, but now the market isn't there. I'm going to have to hold it. You always need a backup plan. And if you are working with a realtor, some of this could be diverted, right? Even when buying, like, have that professional that's there to help, or you have to know the market, like the back of your hand yourself, right? Like, and in some markets, I'm sure you do that. And other markets you're getting into, you're like, hey, I don't know this one. I need that help because historically I don't know that market. And I'd be in the same boat if I was looking to buy in a different area other than, the Sarnia region, because it's not something that we track, right? Unless we're, like you said, we have our blinders on and we know what we know.
Yeah. And you make a good point about the working with a realtor. And I think that especially newer investors can get a little bit, the lines blurred as to dealing with the off market and, essentially a realtor on market. And I would say that you should really have a very good relationship with a realtor, no matter what you're doing, and be very transparent with them that says, I need your advice on this property, and maybe I am not going to buy this through you, but I will be selling it through you. If I need to buy a rental, I might need your assistance. There's a certain give and take, and if you find a realtor that's interested in a relationship in the long term, they're going to understand that not absolutely everything is going to be bought or sold through me, but we have a relationship where you're going to be honest with me. We're going to talk this out, and there is going to be give and take throughout the relationship, right?
For sure. And I'd say a lot of realtors won't do that. Investor focused ones will, right? Like, it's about relationships, and there's always boundaries on either side, right? Like, with what you tell or what they tell, and just legal lines you can't cross. But we're not going to find those out unless we have a real conversation, right? There's no.
Oh, I'm not saying, definitely don't tell your realtor that there's asbestos in the ceiling or anything like that. Don't use that word with them.
Oh, well, yeah. I honestly, I was in safety before, so I would already catch that for the most part. Prior, we're in the area of safety, Sarnia is. But yeah, no, it just comes down to, like you said, having real transparent conversations prior, because you also don't want to piss your realtor off and they're like, you've asked me all these things, you've told me you've bought 10 private deals you never told me about, and like, what are you doing, using me?
Exactly.
So there's definitely a level of transparency that needs to be had, and I think that should be had prior to entering anything. Build those relationships, and both parties can benefit in the long run, is my belief.
100%.
So where does this leave us with Sarnia then? As we were saying, there's more conditional offers. Investors, I see it as well, are getting like, cold feet. Like, do I buy? Do I sell? Similar to the stock market, people are like, what the heck is happening? So where's our areas of opportunities? One, maybe if you need a conditional offer, you might be able to get it still, if even in multiples. No guarantee. This is definitely still the lower chance of the opportunity, but it might be worth the try. I definitely say, even if you were pre-approved or talked to your mortgage broker a month ago, touch base with them again. I'm getting more and more home buyers that are like, hey, I can't afford these homes now because the interest rates or something changed at my bank. So if you haven't yet and you're, actively looking, whether it's in Sarnia or anywhere else in Ontario, touch back around with your mortgage broker, because these numbers have changed in the last month. So make sure you are where you are, because sometimes mortgage brokers won't like message you and say it has changed, right? So make sure you know that. Multifamilies, I would say, if you can find them, these are, and the numbers work. This is something like in the last week, I think there's been 3 or 4 multifamilies that have popped up in Sarnia, some that are turnkey and some that are not. So this would be where I'm saying your areas of opportunity are, just because the single family homes are getting a little too expensive in some areas in order to make the rents make sense. And for me to like guarantee that you can get the level of rent you're getting now, right?
Mm-hmm. Mm-hmm.
So that would be a big one. And then the burst strategy, just because that's what some of my investors are having to do instead of flipping, right? You know, like they're getting flips and saying, hey, I can make so much money. And the market is saying, hold back, maybe you won't. So the burst strategy still should be super successful. You know, you can refinance and get those numbers you need, but you have to think about, like we talked about, that, you know, backup option of, do you have the ability to hold it if you need to, if you can't get the flip income you're looking for?
Yeah, I might be facing that myself.
And you never know, and that's where, you know, you have to have your conversation with your realtor and say, like, hey, is it worth trying to stage it and selling it? And then, you know, if it doesn't sell, getting it refinanced with the nice staging material in it. Like, at what point, and what are your options, and what are your goals, right? So having those real conversations and seeing if it's even worth it for you.
Yeah, for sure. And a lot of the time, I mean, these are all backup plans, so you just sort of engage them as needed. But I'm personally, I'm keeping moving forward with the flips
Yeah.
until literally the moment that, you know, I'm finished, and, you know, maybe the last couple of weeks or a month, and reevaluate at that point.
And I think that's
pointless forecasting today what I'm going to be doing in July, right? Like,
yeah, and I mean, there is more stuff on the market, and what if a neighboring house sells? No problem. And I always remind people as well, like, obviously you're flipping, you're making it a newer home inside. That will always sell better than a home that needs renovations, right? Like, homes are still selling. They're not sitting for months. They're still getting offers. They're just not selling as crazy, right? Kind of, again, like the stock market. It's still selling. It's still going up. It's just not spiking 20% in one day and keeps rising, right?
mm-hmm. And this is going back to your first point, the conditional offers. I think that there's some investors that only buy off market. There's some investors that pretty much only buy on market, and then there's investors that are a blend of the two. And for the longest time, I just completely ignored on market because of, I don't want to be involved in a 20-person bidding war at retail prices. But now is an opportunity. Is people are freaked out, and when people are freaked out, that's the best time to look for the opportunities, right? And if you can, even tying something up with a conditional offer, shit, I haven't even heard of that in like 2 years, right? And as well, I'm starting to see where properties, what is it, the what's the term when a property doesn't, it's taken off and then put back on or whatever?
Oh, canceled and relisted
Yeah,
type thing. Yeah,
so
because
that's
they don't
going
get
on
what they
quite a
want.
bit right now.
Yeah, yeah.
Because people are trying to figure out the you know, offers by date versus just posting it at the price I want. But I know a friend of mine that she's been looking for I think she said 6 months, and she's an on-market buyer, and she just found something because there was some dated listings and a funny scenario with the listing, and she ended up getting, you know, the price that she wanted eventually. So
Yeah, I
do the follow-ups, right?
Yeah, you need to
Sometimes,
watch. I mean, things aren't expiring, I would say. Like, that's where it, you know, sits the 2 or 3 months. Like, that's still not happening. You know, we're not at that point. But things are getting canceled, usually to get raised, like you said, raise the price. But it's definitely worth it, especially, you know, work with your realtor. And, you know, I sometimes search, like, what has been on the market for 7 days. Before that used to be nothing,
that's a
right?
long
Like,
time.
but now I'm catching, you know, like, especially for my clients that need a condition for whatever reason with their bank, I'm like, okay, we're not going to see properties, you know, unless I know that they've passed the offer date. And they are coming up, you know, like they're still sitting there, like a few. So, I mean, that's where I see the biggest shift is things are going past the offer date. A few, again, it doesn't mean they won't have multiple offers 5 days later. And it doesn't mean they're not going to sell for asking, because they're still expecting that. But depending on the scenario, if we know they need to close in 15 days, they never got offers on offer day, that's a pretty big indication that maybe as an investor, we can get a deal, right? Like, there are scenarios where we really need to, and that's where, you know, having that realtor, if you're looking on market, helps, because when you're looking at realtor.ca, you can't see any of that.
Well, and all the stats and everything that you can look at, you can make assumptions on buying behavior, but really, the local realtor is going to have like a very accurate read on the mood and the personalities and whatnot is what's going on in the buyer's market from that
that perspective, right? Like people waiting. I've heard the same thing from realtors. Is people are waiting for literally the day after the offer date and putting in an offer that's lower than like what they would have put in if they had worked before the offer date, right?
Correct.
So there's a lot of new and interesting, I don't want to call them games, but strategies going on in the last several weeks, months.
Oh, I would call it games. I joke that honestly it's been harder these last 2 months than it has been, in 20 offers. Because I still find that the sellers in some cases are at that level of I need this high price, but it's not happening. Like I had one where we were the only offer, so then they decided to extend the 244 to wait another week before they'd look at offers.
Right.
And it's like the market is changing. Like we as realtors and as sellers, it's not always our choice, obviously, as realtors, but we need to train our clients and, we need to really look at this and see. But it'll be interesting, again, in 3 months, as we talked about that September market, I think that's where we'll see, is it a solid change or is this just, again, people are getting out and leaving? Because interest rates are still historically low at this time. Like it's not something wild, but I think we need to see is people's expectations changing, or is this really just a solid market change that's going to stay?
Combination of a few things, I'm sure.
Exactly. So we will see, but still lots of opportunity in Sarnia, and really, as mentioned before, and as you I'm sure know as well, like Sarnia does have pretty high rent prices for what the community is. It's really hard to find anything under $1,800 a month, right? Just because they're not available.
Yeah, and there's only so much inventory in the rental market here. Pretty much
Correct.
the South End, right? Like.
Yeah, and I mean, I know there's some apartment buildings and things like that in the works, but even that is being extended out. It's years away. Or the one I think that's almost ready, it's starting at, it seems like $2,000 a month just for a bachelor. So again, it's still over that price of what you can get for these townhouses and homes. Like it's still not catering to the right population.
Yeah, I think this, unfortunately, like everywhere, it's that more affordable rentals that are a little more difficult to come by. So I do feel for that segment of the market, because even the new buildings that are being built are going to be a higher value, right? You just built a building, so I have to charge for it now.
Exactly. And I do think maybe, but I think it's 5 years away when more apartment buildings come up, there's more vacancies, like that will push the price down. But for now, we just have such few, like, you drove around Sarnia, there's not many apartment buildings. It's all single family home. People love them. So it's pretty hard to get high vacancies at this time anyways. Other than that, that's really all I got for you.
That's plenty. That's 41 minutes of us talking together. So.
Yeah, we like to chat. It's interesting times.
If everybody liked what they heard and saw, remember to like, subscribe, and hit that notification bell if you want to see Sarah next time.
Awesome.
I was coming up with your handle, She Will Sell It, and I think in my mind I kept thinking to myself, sell it with Sarah. Came to me naturally, and I realized there's a book called Sell It Like Sirhan.
Oh, I haven't read that one.
Ryan Sirhan is a high-end, Manhattan real estate agent.
Yeah.
And he has a book called Sell It Like Sirhan. So it's
I might have to read it now.
Sell it like Sarah. But anyway, no, everybody, this is She Will Sell It on all social media. Sarah Arseneault on Facebook, obviously. I am Andrew Cox, and Andrew Cox REI everywhere else. We're so happy to have you here today, and thanks for sharing.
Thanks for having me. See you again soon.
Yeah, well, hopefully I get to do this again if they have me back.
Yeah.
All right, YouTube, thanks so much. Have a good one.